Okay, so in this video, I'm going to be talking about how I made $78,822 in February. Okay, I'm going to be giving you the strategy that I use to pull that off. And it's very simple stuff. I said it on Twitter the other day. All I do is this. Here's all I do, guys. 3 things: market structure, liquidity, and time. And what I'm going to be doing is I'm going to be explaining those three components of my strategy, because that's all I fucking do. All right, I don't look at no damn quarterly theory. I don't look at supply and demand. I don't count candles. Now, if you do that and you find success doing that, then great, good for you. Keep doing what you're doing, right? But what I mean, what I'm getting at this is you don't have to overcomplicate this shit. It can be a very simple business. Okay, and the reason that people overcomplicate this is, now, is everybody the same when I say this? No, but for a large portion of the people, this is the case. It is for ego reasons. People overcomplicate trading for ego reasons. What do I mean by that? Well, let's unpack it. And yes, I'm not going to, go on a tangent too long here. I'm going to go over the strategy, right? So, don't worry, we're going to get into that. But I want to address this real quick. Why is it ego? Well, because people hate taking losses because you're wrong. And whenever you're wrong, people take that as a hit to their ego. And what a lot of this over-analysis is, at a certain point, we're all adding all these different concepts, all these different things. Then at a certain point, it is you trying to avoid being wrong, looking for that holy grail, always looking for that next shiny thing. It's you trying to avoid being wrong, you trying to protect your ego. But a lot of people don't want to be honest with themselves and admit that. It's not just I just want a better understanding of price bullshit. Yeah, you want to have a good understanding of price, but a lot of this stuff is overkill. I see a lot of people doing. And I mean, it's just a very simple game, but simple isn't easy. Okay? Because the key thing that a lot of people overlook, because I'm going to give you the technicals, I'm going to tell you what I do. But it's not going to help you if you don't have your psychology on point, if you don't learn to embrace losses. Because, as I was saying, a lot of that stuff is just you trying to avoid being wrong. And there's no way around that. You got to embrace it, that it's a part of the game. Regardless of what strategy you trade, you got to get used to it. You got to embrace it as a part of the business. But a lot of these people that do all this, try to do all this fancy stuff over here, they're not that far in their trading career. Okay, they haven't got to that point yet. They're still in that stage in their career where they're chasing shiny objects and they're looking for that magic thing. They're using a million different concepts at once, all because they cannot take L's. And I'm not shitting on you. I've been there, and I overcame it. And you will too. You keep at it. You keep doing your thing. You'll get there as well. But now, off that, and we're gonna get into the technicals now, but just wanted to state that, make that very clear right off the jump. So, as I said, market structure, liquidity, and time. And I do have playlists on market structure and liquidity. And I've talked about time on this channel as well, and I'll dig deeper into that. But after you watch this video, I want you to go watch my entire market structure playlist, and I want you to watch the liquidity playlist. I want you to watch all that, okay? Because everything in regards to the technicals that you need is on this channel. Okay? I've laid out just an entire framework for you. So, market structure. In simplest terms, let's zoom out here and let's look at this NZD-USD. We're going to talk about some stuff from Friday just for this, because a lot of my plays, they have, they're similar. Is every play the same? No. But they hold very similar signatures because it's all based around liquidity. It's all based around market structure. It's all implementing time. It's all I utilize those 3 components in every single play. Every single play that I took in February used those 3 components right there. So now, and also what I'm going to do is I actually made a video called The Strategy I Will Be Using in 2024, something like that. The new strategy I'll be using. I'm gonna link, after you watch this video, I want you to watch that, and I'll leave a link to that in the video description, and that'll help you as well get an understanding of this, okay? But like, for example, we have something that is like into the USD. What is the market structure on this? The higher time frame market structure right now, it's bearish. It's absolutely bearish. So then somebody may think, okay, I know where you're going with this, Mike. If the market structure is bearish and you looked for a short setup on this on Friday. Nope, actually I looked for a long setup. What do you mean look for a long setup? That doesn't make no sense. So you're counter trend trading. Well, with this specific play on the higher time frame chart, yes, it was a counter trend. Okay. And when it comes to counter trend trading, you also need to be aware of premium and discount. Okay. I have, again, searched my channel for premium. We'll go over it here in this video as well, of course, but search my channel for premium and discount pricing and you'll see videos on it. But here's the deal, guys. Market structure is essentially the trend, because like you can see right here, this is bullish market structure right here. See how like it's putting consistent higher lows? Look right here. Swing low. Swing low. What makes it a swing low? Lows on the middle, higher low, left, higher low on the right. Look, see how this is consistently putting in higher lows? Look, higher low, higher low, higher low, higher low, higher low, higher low, higher low. And it's consistently making new high, make a new high, make a new high, make a new high. In simplest terms, guys, that's bullish market structure. As I talked about in my market structure series, that is bullish. It's a bullish trend. It's bullish market structure. It's consistently pushing up. And then look right here. What's this? That's a market structure shift to the downside. It comes down, boom, it cracks this low, strong close, fair value gap, shift. And then guess what? It puts in a short-term high, short-term high, short-term high, short-term. It's consistently moving lower now, bearish market structure. See that? So that is market structure. You need to be aware of the trend and have a firm understanding of that, okay? And we're going to tie this together here in a moment. We're going to tie it all together. Liquidity. So you need to have a firm understanding of liquidity. I have an entire series on liquidity, but here is the deal on this Insight USD from Friday. Here's how I approached it. There's several liquidity pools you got to be aware of course, but a major one is Asian session lows and Asian session highs. Okay. So this morning, because look, here's midnight on Friday. You see this right here? This is midnight. This is where we come into a brand new day. It's after midnight, New York. And then look to your left, we have Asian session to the left of midnight. And Asian session begins right here. Look at my cursor. This is where Asian session actually begins. Look at my cursor right there. And this is the absolute low that was made during Asian session right here. I was already aware of this level. I was already aware of this level beforehand. See that? Coming into the day, I was already aware that was a key liquidity pool, sell side liquidity pool. And what you need to understand is price is always seeking that next key liquidity pool. Okay. So I understand that all right, so there's midnight, as we already said, and it got a little push up right here, and then it sells off, and it's selling off into when? London kill zone right here. And I want you to also notice another little key detail right here on this play. What's this right here? That's Asian session highs. Why is that important information to note? That is Asian session highs right there. Because remember, this is where we opened up. And this was the absolute high that was made in Asian session. And remember, we're coming to midnight and it sells off and it leaves. It leaves Asian session highs intact. So here's what you need to understand. That liquidity is still there. And it's able to serve as a draw. It's able to serve as a draw later on because it never took it. See what I'm getting at? It never took that liquidity. Now, are there cases where I'll still look for longs and like say they'll take Asian session highs early on and then they'll come down, take out significant sell side to the downside to get a shift, pushes up? Yeah, there's still scenarios, but this is the best. This is what I like to see. With the best scenarios, some of these best scalp plays, if it's a long scenario, I like to see it leave Asian session highs intact off rip and then come down to a significant sell side like we had right here. So it comes down and it takes out Asian session lows while leaving that liquidity intact. So think about this. That liquidity is taken. That liquidity is intact. It's still there and it did not go anywhere. It's there. And also another thing, we're in a discount marketplace on the higher time frame right here. Remember how we were talking about it was bearish market structure, but it's also in a discount. So even with it being bearish market structure, I understand where I am in the grand scheme of things. And that's what you got to understand. It's still in a discount. It's still the cheap marketplace too. And it's taking out significant sell side in a discount marketplace with having agent session highs intact. All these pieces put together, all these puzzle pieces put together, that's intact, taking this discount, key time to look for that liquidity run, of course. And then somebody may look at this and, okay, what about this liquidity down here though? Like, wouldn't you be worried though that it's going to come down into this? I don't give a damn about that. I'm dealing with what's in front of me. If it wants to take me out, then take that, and so fucking be it. What did I say at the beginning of this video? Losses are part of the game. If it's wrong, you know what I'll do? I'll come back to reassess, look for a confirmation off that level. And we're going to go into what confirmation is here in a moment. But I don't give a damn. I'm dealing with what's in front of me. Like, yeah, we got that right there. And guess what? Full transparency, I was actually looking forward to tag this on Friday. I was incorrect on that, actually. I thought it was going to take it right there, and it couldn't quite reach it. But, and then that begs, okay, because I know some people are thinking this on Friday. It was like, okay, well, wouldn't you be worried about that? Because you wanted to see it take this level, and it's coming down right here. Wouldn't you be worried about it? No, because it doesn't have to do it right now. It already has sufficient liquidity. It has sufficient liquidity. It took agent session lows. And now, that's not enough for me, though. After it takes that liquidity, that's not enough for me. I don't just get in and buy it after it takes this liquidity. I want that elephant to jump in the pool. Elephant, Mike? What are you talking about? You crazy as fuck. What do you mean by an elephant? Well, if you watch ICT videos, you know exactly what I'm talking about. That elephant jumping in a small pool leaves a big splash. That's smart money. And I want that smart money footprint put in place. What does that look like? Because I need them to tell me. I don't predict anything. I don't predict a damn thing. I let them tell me when they're ready to send this thing higher. So I see it. I've already identified my liquidity. Wait for liquidity or you'll be liquidity. I say it all the time. Wait for liquidity or you'll be liquidity. I waited for liquidity. Taken. Boom. Done with. Swept it. But now I need them to step in and give me that confirmation. I need them to step in and say, hey, Mike, we're ready to send this thing higher. How do they say that? How do they talk to me? Well, they're going to leave a shift in market structure. Again, it ties into what I was just saying a moment ago. What did I say the components of my strategy are? Market structure, liquidity, and time. And this is another component, again, utilizing the lower time frame market structure here. Because with this specific strategy I'm talking about, it's execution on the 5-minute chart. So we take out that liquidity. And when it's doing this, when it's selling off to take out this liquidity down here, it's bearish market structure taking that out. This is moving lower. Remember I just said a moment ago in regards to market structure? It's consistently putting in lower highs. It's consistently making new lows right here, isn't it? Absolutely. And it's doing that down into a key liquidity pool. But remember, don't forget, we still got agent session highs up here intact. It didn't go nowhere. It's still there. Higher time frame discount, taking out major liquidity. And also, another thing I like is we did have the institutional price level. It didn't quite test it. It did a little bit later, which is why it rocketed up. But we took out agent session lows in there. That's significant sales. And now I want that confirmation. I need that change in trend, that shift in market structure off that liquidity. Okay. And you can see what is the signatures for a high probability shift? Well, I need fair value gap. Look right here. And if you don't know what fair value gaps are, I'm going to leave a link in the video description to my video on fair value gaps on just simply how to identify them. And right now I'm telling you how to use them or how I use them. Well, I use them for several reasons. Sometimes I use them for profit target objectives, sometimes, and then obviously for the 5 minutes for confirmation. But look right here. 1, 2, 3. Top of the first, bottom of the third, do not touch, leaving an imbalance. Then I need a strong close above the candle high. Look right here. Closes above it, confirmation. Bada beam, bada boom. Then we look for it to seek opposing buy side. Where's the next key to opposing buy side liquidity pool? Up above. Agent session highs. Because remember what I was saying earlier? It never took it. That was intact still. That liquidity right there was left intact. Never taken. And we got this move lower right here. And what did this move lower do right here? What did this move lower do this morning? Or on Friday morning? It took significant sell side. It took that liquidity already. That liquidity was done with. And price is going to want to seek that next key liquidity pool because it has sufficient sell side. It has sufficient sell side already. But now I need the confirmation, change in trend, gives it. After that change in trend, I simply look up and I identify the next key liquidity pool. And I have this buy side up here. And yes, I have buy side. Actually, technically, the next key liquidity pool is right here is Hive Day, but I figured it was going to take out this as well. Why? Because it was still intact. You have Hive Day buy side, then you have Asian session high buy side. It cleaned out both of them with ease. And that's what we saw happen. Okay. That's all. Like, that is market structure and that is liquidity. Takes liquidity, change in trend, shift to market structure, seeks next liquidity pool, like ping pong, back and forth, right? And now the next component, because then you're like, okay, that's cool, but what about time? What do you mean by time? Well, when I say time, I'm referring to manipulation. Okay. I'm referring to key times where, so like, for example, I'm only going to be, now I start trading at 3 o'clock. No, ICT has to 2. I do 3. I found good results waiting for a 3 o'clock sweep. So I like to see a 3 o'clock sweep. When I say a 3 o'clock sweep, I'll start hunting after 3 o'clock and I look for my key liquidity sweeps after 3 o'clock. I look for manipulation after 3 o'clock. Okay. In London session. So like, for example, I have 3 o'clock right here and you can see like it had this little push up right after, you can see it had a little push up right there. It had its bottom. I mean, yeah, that was actually 3 o'clock. It did have the sweep technically right there, but then it has a push up and then boom, it comes down, sweeps lows. The key thing here is I'm looking for it to move lower into 3. If it's a bullish scenario, I want to see a move lower into 3. I need to see it take out sell side. And again, here's that move lower and it takes out low day sell side, but what does it do? What does it take lower? Asian session low, sell side after 3. So I'll look for that. Again, it's in London, of course. I look for that liquidity sweep. I look for that manipulation because that's what that is. It's manipulation. Lower. Take that sell side. Because if you're a short and this thing, because it looks very bearish in the moment, it's selling off, that's going to create buy side above these highs. That's the intention. It takes a sell side, has a change in trend, confirmation, attack the opposing buy side. It attacks the opposing buy side. It does end up having to shift a little bit later, and then it seeks the opposing sell side below, has news, takes care of it, ramps it up. And that's how I'll operate. Now, all my plays, they have, is it all like this? No, this isn't exactly like all my plays. It has variations. But everything that I do revolves around everything that I did in February holds these 3 components: market structure, liquidity, and time. Okay, I got to consider all of it. Okay, I had the liquidity, I had the market structure shift, and then I seek the opposing liquidity, and then it had to be at a key time as well to do that. And that's what I do. I keep it very simple. Right? Simple makes money. Now, your only issue, or a lot of your issue, is going to be, again, resisting that urge to overcomplicate, because it's easier to overcomplicate. And then people want to mask it. Oh, you're just too lazy. You don't want to study price. Bull fucking shit. I see right through you. All right, don't give me that bullshit. Oh, you just don't understand price. Well, my pockets speak for themselves. Okay, not to be too arrogant. So I can tell you, simple fucking works, guys. All right, so you can keep that, all your little pretty drawings. You can keep all your little fancy shit. Ooh, look at my quarterly theory. Ooh, look at me count my candles. Look how fancy I am. Nobody cares. You're still poor. You're still broke. Okay? And I say that mainly to the cocky ones, right? If you're really making an effort to improve and be better and you're really striving for that, then good for you. But I mean, there's a lot of those people in this industry, like they have such big egos, right? There's so many big egos in this fucking industry of people with no results, nothing to back it up. It was just pretty fucking drawn. I literally had somebody on my Twitter the other day comment, say, Mike, I'm going to help you. Your charts look so fucking ugly. I'm going to help you make your charts look prettier, basically. I was like, oh my gosh. I mean, this is, and so many people think like that. It's crazy. Like, what are you here for, right? Are you here to make money? Are you here for your ego? Because that's what it is. It's ego. Okay? So, simple works, guys. Simple fucking works. You just gotta, again, and once you got the system, once you know what you're doing, then it comes down to psychology. Okay? Which everybody wants to skip that part. And I see a lot of people trying to downplay psychology now. More and more people trying to downplay it, say, oh, it's overrated. And those same people never have any results, of course. And, well, you're going to stay in that hamster wheel of just losing money if you just keep neglecting psychology, because I can give you this strategy on the platter. I've given several models on this channel, several, but it's just one part of the equation. You got to do all the work in regards to building that psychology as well, which I've taught you. I even have an entire series on psychology, an entire playlist. Check my playlist channel. I have an entire playlist on psychology. Go learn from it. Okay. So enough of that tangent. And, but that about covers it, guys. That's what I did. And, that's what I did in February. That about wrapped. That's like everything I do revolves around those three concepts. So, and if you want to join, if you want to learn a little bit more about how I do things, my strategy, follow along real time, because all these plays that like everything for February is posted in my free Discord chat beforehand, no hindsight, in the Mike's analysis section. So if you want to take part in that, learn a little bit more closely from me, then I'm going to have a link to my free Discord chat in the video description as well. So yep, you can join that if you want as well. All right. If you enjoyed this video, like, subscribe to the channel. I'll catch you there.